Hello, everyone, and welcome in to CrushTheStreet.com. I'm Kenneth Amaduri, and with talks and rumors of war, gold seems to be catching a bid here. Today, we saw a 2-month high with Trump's strong talk against North Korea, saying that they could be met with fire and fury, and it has caused the markets to react. So to talk with us today about gold and the sector in general, we have Ed Karr, the CEO and president of US Gold Corp. This is a company traded on the NASDAQ under USAU. And Ed Karr has been in the natural resource industry for many years, has tons of information and experience to share with us, and really how it plays into, opportunities for us as investors. So Ed, thanks for coming on the show with me today.
Kenneth, thanks so much for having me, and thanks for the interest in US Gold Corp.
And we are seeing quite the dichotomy with the financial assets currently being expensive. Talking about stocks and real estate, and real hard assets being largely cheap. And gold, as I said, is getting some action as of today. But by way of introduction, can you give us an idea of where we are right now as far as gold as an investment?
Sure, I'd be happy to. And as you rightly pointed out, gold's up today on those comments from Trump. I mean, we have a lot of conflict going on in the world, not just North Korea with their nuclear firecrackers and all their saber rattling. But if you look around at this world that we live in, just one of our southern neighbors in the South America, look at Venezuela. Their economy has been just imploding. Their currency, the bolivar, has been going parabolic and vertical. So absolute meltdown. And, people, if they would have held gold instead of holding their local currency, they would have actually maintained some purchasing power parity. So I think when we look at the macro picture around the world, even though gold has been out of favor now for a little while, it's been a real tough time, a nasty bear market since 2011. Gold made this high in the end of 2011 at about $1,950 an ounce, and then just got slammed all the way down to about 2016, base just around $1,000 an ounce. Today, we're back to 1270, 1275 or so. But when I look at this world that we live in, and North Korea is just one example. I mean, the Middle East, we've got huge issues there. In Europe, you see all the terrorism that's been happening, the uncertainty. We have massive global debt problems. You look at China, one of the biggest debt Ponzi schemes probably in the history of the human race. Japan, the Bank of Japan is literally buying their entire government bond market. In the United States, we have tremendous political crisis. Who knows if we'll get healthcare reform, tax reform, infrastructure. You just don't know what's going to happen. There's so much uncertainty, probably more than anyone remembers in their lifetime. And in these sort of times, precious metals can really give you a lot of safety. So I think we're going to see more inflows into gold, silver, and all the precious metals going forward.
I actually agree with you very strongly on that. And it's interesting. The US dollar has been on quite the free fall here since the beginning of the year. Had a lot of strength, hitting 103, especially after Trump enthusiasm and all the surge that went into the market and into the dollar. But we've seen quite a lot of weakness with the US dollar. We're right here at the 93, 92 range on the dollar index. But if you're looking at a chart much below this, it's just a free fall down to 80. And I just prompted you with that. But what do you see? You mentioned quite a few things as a catalyst looking forward for the potential for gold to go higher.
Well, I tell you, there's so many. And when we look at the U.S. dollar specifically, as the dollar weakens, historically, the price of gold tends to go up. And as you rightly pointed out, Kenneth, the dollar has been really strong up until just a couple of months ago. If you look at gold and the price of gold in Mexican pesos and Canadian dollar, British pound, it's actually pushing all-time highs in a lot of currencies, just not the U.S. dollar. But I think that the dollar's days are numbered. And when we look at a flawed currency like the euro hitting 118, 119 versus the U.S. dollar, that's got to get people starting to question and wonder what's going on. And for me, one of the big factors coming up that I look at that I don't see too much talk about in the press is this U.S. debt ceiling. So, in early October, potentially the U.S. federal government is going to default. They will literally run out of money. Okay, when, Schwarzenegger was governor of California, he tried to hand out some IOUs because California ran out of money. Illinois as a state is technically bankrupt right now. And the U.S. federal government is bankrupt. It'd be nice to have politicians that would just stand up and tell the American people the truth, that we're bankrupt. A lot of these entitlement programs are ultimately going to have to be cut, but we have political gridlock in Washington, D.C., and the Republicans are not working with the Democrats. No one's working with the Trump administration. It is just absolute chaos. So I think there's a real possibility that the United States federal government defaults this time, and we do not get a debt ceiling resolution. Ultimately, we have a default, and I think that could really set off a cascading effect, a ripple effect of a lot of these derivative contracts that Warren Buffett called, financial weapons of mass destruction. And it could cause a pretty bad domino effect to set off. You'd see the dollar have a real decline, and I think you'd get a very firm bid in the precious metals. We could see a real melt up in gold in that sort of worst case scenario.
And it's interesting because right now gold has been relatively depressed, and the companies themselves have felt the pressure from that. And we're talking about major gold miners here. Proven reserves on balance sheets have retraced to 2004 levels. And before we explore that a little more, are we seeing this because of the price of gold being down and the enthusiasm in the market not being there and the majors not going out to look for more ounces in the ground?
Yeah, it's a great point, Kenneth. And there's several factors behind it. The majors tend to be not the best market timers. So going into that last big bull market run, 2009, 2010, 2011, when we saw the price of gold go through 1,500, 1,700, up to 1,900, a lot of the big majors took on a lot of leverage. They took on a lot of debt, and they went out and they did acquisitions, and they tried to acquire companies and add further ounces into their reserves and onto their balance sheet. But then ultimately the price of gold rolled over 1950 all the way down to 1,000. And if a big major had made an acquisition, and that acquisition maybe had a $1,200, cost of production, at $1,900 gold, it looked great. Gold goes to 1,000, it doesn't look so good. So then as the bear market came in, most of the majors had to divest. They really had to get their debt under control. They had to clean up their balance sheets. They had to get rid of assets. A lot of these were fire sailed. And the big majors, they have not really done any traditional exploration in quite a long time. The big majors in the gold mining industry, it's exactly the same if you look at like a lot of the big pharma companies. They don't go out anymore and do real early stage generative exploration. They would rather let a bunch of junior companies go out there, do the exploration, and ultimately, if some companies prove up a discovery, the big majors tend to come in and acquire them, and they tend to acquire them at the peak of the market rather than at the bottom of the market. I mean, if I was an advisor to one of the big majors, they should be really acquiring companies now because we're seeing the price of gold increase, and yet we have not seen the stock prices of any of these companies increase yet. So the precious metals are the leading indicator that good things are going to come to this sector. And these markets are cyclical. So these bear markets tend to run for 4 or 5 years, and then new bull markets tend to develop, and those run for another 5, 6 plus years. So I really believe, Kenneth, that we are in the first inning of a 9-inning ball game, and this next cycle has the potential to be really, really exciting.
So, Ed, you brought up a lot of things right there, but what came to mind is 2016, and you said we're in the first inning of it. What did we see in 2016 then in the mining sector, and where are we now, and what do you see going forward?
Yeah, what we specifically saw was kind of the final washout of the bottom of the bear market. And we saw specifically the price of gold stabilize. So the price of gold is up off the lows. And you look, making a low around $1,000 an ounce, today at $1,270, we're up 27% from the lows. So that's pretty significant. And at $1,250, $1,270 gold, a lot of the mining companies and a lot of the projects really start to move back into the green. So these become profitable. And if you look at some of the recent earnings and numbers that came out of Barrick, out of Newmont, out of Gold Corp, they're starting to look a lot better. So as the price of gold increases, and definitely as we push through $1,300 an ounce, which I believe we will this fall, these companies are going to start becoming cash flow machines. As that happens, more and more investors will start looking to this sector for real value, because these companies are trading at EBITDA values, net price to net asset values, price earnings ratios, very, very inexpensive. So a lot of your generalist investors out there, your institutions that have made huge money in Facebook, Netflix, Amazon, the tech stocks, the big pharma, I think you're going to see them start to take profits in a lot of these high-flying stocks and look to deploy it in some real value sector. And the mining sector right now represents tremendous value.
Well, let's talk then about specifically exploration companies taking advantage of where we are right now in the current cycle, and really U.S. Gold Corp, what you guys are doing and the opportunity that there is right now with what you guys are endeavoring.
Yeah. I mean, it's a fantastic time, I think, to be in the gold exploration sector. And I think we are, again, in the very early stages of this bull market. So, for your listeners and all of your follows out there, one of the real keys to making money in a cyclical sector like the gold exploration sector is timing. You got to get the macro timing right. If you're buying great quality exploration companies, junior miners or the big major miners in a bear market, you're probably going to lose money. So you need to be in a bull market. And that old expression that, a rising tide raises all boats. So as this bull market starts to develop, I think these stocks can really, really run. And I believe we're in the very early stages now. So that's the first important thing. The second thing, to make money in the exploration side, you got to look at companies that have certainly attractive valuation, but also have projects and management that have incredible potential. And you look at our company at U.S. Gold Corp, I mean, our chief geologist, Dave Mathewson, he has an incredible career, over a 50-year career, 35 years alone in Nevada. Used to run exploration in the Great Basin for Newmont Mining. After that, he formed his own company called Tone Resources that he sold to Rob McEwen. Then he was one of the co-founders with Luke Norman of Gold Standard Ventures. They put that company together in 2010 at about a $15 million market cap. They have a project on the Carlin Trend in Nevada called Railroad. Dave Mathewson and his team came with a discovery. The stock performed extremely well. Market cap of the company went up to almost $1 billion Canadian. And then Dave left to pursue one project and a property called Keystone. So Keystone is our flagship property within U.S. Gold Corp. It is on the prolific Cortez Trend in Nevada. So we are 10 miles south of Barrick Gold's Pipeline and Cortez Hills mines. Those are two of the biggest mines in Barrick Gold's portfolio. Between Pipeline and Cortez Hills, Barrick produces over 1 million ounces of gold a year at an all-in sustaining cash cost of about $600, according to their latest website presentation. So those two mines alone throw up $650 million a year of free cash flow to Barrick. And Dave Mathewson believes that our property, Keystone, has the exact same sort of potential as those two major mines. It's very prospective. It's got the right host rocks. It's got the right geology. We've done a bunch of work there, and Dave Mathewson really believes that this is the most exciting exploration project he has seen in his career. So he is very confident that Keystone, the district, is capable of hosting multiple world-class discoveries, and we are out there doing exploration to try and prove up those discoveries.
Ed, it's really exciting, and I was just on the top of my mind thinking about it. I'm like, man, what makes these geologists so successful, like a serial successful geologist, Dave Mathewson, on your team, probably one of the most accomplished ones in Nevada. And what's so special about him that has separated him from the rest?
Yeah, it's a great question. And, when I started first myself investing in this junior natural resource space 25 years ago, I didn't know too much. And I just thought, if we take 100 Nevada geologists, okay, I took high school statistics. I remember, standard probability and normal bell curve distribution. So 100 Nevada geologists, probably a couple found no gold, a couple found a lot of gold, and most of them have found some gold. And I tell you, Kenneth, the industry is not like that at all. Of those 100 Nevada geologists, like 95 have found no gold. And 5 guys out there have found all the gold. Now, I know I'm exaggerating, but just to try and make a point.
Right.
Literally, there are a handful of guys that are absolute rock stars that have found gold deposits time and time again. And Dave Mathewson is one of those rock stars. So how does he do it? I don't know. Maybe he goes out and drinks peyote tea on the property and communes with the rocks. I don't really know his exact secret recipe, but I do know Dave has a real formula for success that he follows time and time and time again. So for him, for a property, it's got to be in the right district, in the right location. It's like in real estate, location, location, location. Real estate in New York City on Park Avenue is worth a lot more than, real estate just in a cornfield in Kansas, because it's the right location. So these major gold trends, these major gold deposits, they tend to form in trends in north central Nevada. You talk the Carlin trend, the Battle Mountain Eureka trend, the Cortez trend, right where we are. So we are in elephant country. We are in the right location. Then Mathewson goes out and he wants to make sure the property has the right host rocks, because you need the right geology. You need very specific rocks to host these massive Carlin-style gold deposits. If those rocks aren't there, then you're not going to have any gold deposit. At Keystone, we have all the right host rocks, and we issued a press release prior talking about some of our drilling results. Then Dave Mathewson always does advanced geophysics. He's a big believer in gravity. Gravity can show the underlying structures, the different densities of the rocks below the surface, because these feeder zones tend to form on big structures. So he's got to make sure that those are there. He wants to make sure that all of the right conditions are there: brecciated rock, highly altered rock, arsenic, trace elements, thallium, realgar, etc. We have all of those at Keystone. So we know at Keystone there is a big system at work. There is a big epithermal gold system. We believe in our district, and when I keep saying district scale, Keystone is 9,500 acres. It's 15 square miles, 479 claims, so it's good size. And we believe the Keystone district is capable of hosting multiple deposits. So now we've got to go out and we got to actually try and vector in with our drilling and put a drill hole into some ore bodies. So that's the challenge for us as a company. And we're confident that if we give Dave Mathewson enough time and enough money, he is going to come with another discovery.
Wow. Well, it's really exciting, especially as we talk about the converging of events and the timing and the cycle that we're in the market. So Ed Karr, U.S. Gold Corp, traded on the NASDAQ under USAU. Ed, thanks for coming on Crush the Street today and just sharing your thoughts with us.
Kenneth, it's been a real pleasure. Thanks so much for having me. Thanks for the interest in U.S. Gold Corp. And we look forward to hopefully coming back someday to keep all of your listeners updated.
Absolutely, sir. Thanks.